How to select the proper quantity for trading. Do you know that there is a simplified way by following which you can reduce the loss and make huge profit in the stock market? This is a technique which is like one of the secret of the pro traders. These pro traders follow this technique and it allows them to make a lot of money in the stock market. And that is why whenever the pro traders make profit, it looks like this. And whenever they make loss, it happens to be very small as compared to the profits. And in this video, I am going to exactly teach you the technique which is called as risk management and position sizing. You know, the traders who continuously make money in the stock market very well know how to manage the so-called risk and limit the loss by sizing the position correctly, that is buying the right number of shares. And today you will completely understand risk management and position sizing in detail. And I can tell you that if you learn it and implement it continuously in the market, you can see a noticeable difference in your trading and your profit and loss. So if you don't want to miss some pro trader stuff and make money out of it, make sure that you're watching this video till the end. Do not skip it. And one more thing, if you find anything valuable, anything that can add value to your trading, make sure that you subscribe to this channel and press the notification bell. Alright, and let's start with this video and let us first understand the basic concept of risk management, which is stop loss and target. Now as you can see on the screen, this is a candlestick chart and the red color line is the 20 moving average. And you can notice here, the price is taking a support on the 20 moving average. And if in case you know my moving average strategy, you can understand that we have to go bullish over here. So we will buy the stock at the closing of this candle. We will take a long entry in the stock. But you know, whenever we take a trade or whenever we enter the market using some strategy, there are some chances that we may go wrong and our analysis becomes incorrect and the price that you see might go against us. And in such case, we make use of the stop loss. That is, if we go wrong in a trade and the stock goes below a certain level, we simply exit the trade and book the small loss. And you can see that by using stop loss, we are defining an amount of risk that we are ready to take in case when we go wrong. And this is exactly what the pro traders do. They define the amount of risk they are going to take even before they enter the stock. The next element that the pro traders use is called as target. So when the market goes according to us, we make profit. But after some time, when the price comes near the resistance, there are chances that the market may reverse from there. So we place a target at such level. That means if the price hits the target, we will book the amount of profit we get and exit the trade. So it is like we use target to book the profit and the stop loss to reduce the loss. And let me tell you that in this trade, the risk that we are taking and the reward what we get against it is almost 1:2, which is I can say fair enough. And this 1:2 is called as the risk to reward ratio, which means that for every 1 rupee risk, I am getting 2 rupees profit. And likewise, there are risk to reward ratios like 1:3, 1:4, 1:5. And let me give you a pro advice that always look for trade where you get risk to reward ratio greater than 1:2. And this is where the pro traders make their money by taking the risk to reward ratio of 1:3, 1:5 and even more further. And let me give you an example how choosing a great risk to reward ratio will keep you in continuous profit. Let us assume that you have a capital worth 1 lakh for trading. Your capital can be anything 10,000, 1 lakh or 10 lakhs. You have to do this calculation that I'm showing you on your own capital. And so here I am just taking 1 lakh for an example. So what you will do is that you will take 1% of your capital as risk. So the 1% of 1 lakh happens to be 1,000. So this is exactly the amount you are going to take as a risk in every trade that you make. And the next step is to divide this digit with your stop loss. So let's say I'm buying a stock worth 100 rupees and my stop loss is at 90. So my stop loss will be of 10 rupees. So if I want to take a trade of 1000 rupee risk in that stock, I will buy 100 quantity. Similarly, you can subtract the buying price and stop loss price and do this math according to your capital. And let me tell you that if you are doing swing trading, then you have to aim for a risk to reward ratio of 1:3. And for positional trading, I suggest 1:5 or above it. Okay, so by using all this calculation and math, let's say you do 10 trades. And at the worst, the 7 trade go into loss. And in only 3 trades, we make profit. So if anyone who doesn't know the concept of risk management looks at these figures, he will simply say that the portfolio must be all in red. But that's not the actual case. You see, we have defined our risk prior, that is 1000 rupees per trade. And we made loss in 7 trade. So the overall loss happens to be 7 into 1000, which is 7000. And let's assume that we achieved a risk to reward ratio of 1:3. So when we make profit in 3 trades, our total profit happens to be 3 into 3000, which is 9000. So after doing this math, you can see that the net profit and loss that we have is 2000 in positive. And this is because we learn how to manage the risk and limit the loss in the market. And that is why despite making 7 trades in loss, we can still keep our overall portfolio in profit. And this is like a worst case scenario that I'm considering. That is only 30% of your trade goes in profit. If you master any of the strategy that you're using currently for trading, you can take the number of profit to 50 to 70% of the trades you do. And then you can improve your overall profit and loss. And there are like many strategy on our channel, like the breakout strategy, trendline strategy, moving average strategies, various chart pattern and candlestick patterns. You can watch them. If you want, you can pick any one of them, start learning about it, backtest it, and you can make trades on this strategy and follow this simple concept of risk management to keep your portfolio in green. So lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible and do not miss such many content on stock market, trading and technical analysis. Make sure that you subscribe to this channel and press the notification bell. I will see you in the next video.